Well, big regional banks can be a big tell on the consumer and the macroeconomy. Their lending trends are often leading economic indicators. More lending can mean companies and people are more optimistic about the economy ahead. So what are they seeing up in the great Pacific Northwest? Brent Beardall is president and CEO of WaFd Bank and joins us now. Brent, always great to get your insight. What, if any, changes or not are you seeing from your side of the desk?
Brian, good to be with you again. We're seeing overall the economy remains strong. Certainly there is a lot of uncertainty right now. That is a word that you hear more often than not. And a lot of people are just kind of in wait and see mode. They hear the headline, they see the headline, but it doesn't correlate to what we're seeing on the streets so far. So I think people have big projects that are kind of in the planning stages, but everybody's in a wait and see what will happen with the economy before they decide to take action.
Are people like not taking loans? You know what, Brent, I was going to take a loan. I was going to open a business. I was going to buy a home, but now I'm not because I don't know where things are going to go. That's really the only question I think that matters right now.
No, it's true, and people are waiting to take loans. That's the reality, because they want to see what happens with the economy and, importantly, what happens with interest rates. We know there's kind of a feud going on right now between the administration and the Federal Reserve, but that feud, where are rates going to go, that has people waiting on the sidelines because it matters to them. Are they going to be able to meet their debt service coverage ratios?
And I'm curious, Brent, kind of more broadly, the banks are caught a bit in the middle of this whole thing, right? We talk about what's going on with the credit system. We talk about, what's going on with the dollar reserve status and all these big questions. But you guys have to have both a business model that can deal with all of this and be in the middle of consumer and businesses at a time of great uncertainty.
It is. We do feel caught in the middle a little bit. And it's interesting to see the market's reaction. And as you both know better than almost anyone, the market can be irrational at times. And sometimes we don't trade on fundamentals. Trading today, we're trading below tangible book value. And I just scratch my head when we're solidly profitable. We just put out earnings last week. Our margin was up. Expenses were down. Bottom line profit was up almost 20%, and yet we're trading at such a discount. But that's because of the trepidation in the market right now. People don't know what to believe for the future.
I think that's a great point. What do you do as a business? I mean, so I've seen I wonder about how much this business confidence shock is going to be the thing that kind of tips us into, I hope not, but into recession. Are any anecdotes from the front lines about that?
No, I do too. I worry about that. Are we talking ourselves into a recession, right? Because what we see on the front lines, people are still incredibly bullish on the economy and the prospects today. But what does it mean, all these cuts to, potential cuts to regulation, the staffing cuts that we're seeing in Washington, D.C.? But at the front line, we're hearing all kinds of talk about optimism, but we're not yet seeing that in loan demand.
So you're not seeing it. What are you seeing in loan demand?
I would say it's tepid right now. On the good news front, from a banking perspective, there's not a lot of prepayments. With rates remaining high, you're not seeing prepayments. But, ideally, we would love to see loan growth, net loan growth in the 8 to 10% range. And this year, I think banks in general will be fortunate to have a low single-digit loan growth number.